Is it just the two of us?
Yeah, I guess so.
I thought you're gonna show me your face. Oh, show me your face. Oh, so you feel
We
like
had, what was it, 2 months of winning streak?
2 months
I mean,
straight
if
now.
2 months straight, I mean, not one loss. Everything was proper. If these guys followed the weekly technicals, they would have made a lot of money.
If they did. But everyone's Hail
Which,
Mary.
yeah,
The what's it called? Like crypto just seems to be consolidating at this level. Um, like it just
yeah, yeah.
very much like a trader's market. It's kind of boring. Like I actually haven't been trading at all because I just can't see anything worth the risk. Um, Especially right now, like nothing's for certain, I would say.
Yeah, it's been consolidating. I think the market is in a. I think last week it was just as DXY was pulling back, just picking up liquidity. I think that's why even the crypto market was consolidating, because as a whole, the dollar is too strong at the moment, right? Uh, and I think it was last week or the week before, a lot of the recession is now guaranteed, right? At 98%.
I think people have
Uh,
pretty much, yeah, they've come on board of onto the idea of a recession.
yeah, at last.
But like, yeah, I think only reason being, like, I think I've seen a lot more news. I would say the last 2 weeks that like rental prices have begun to fall, property prices are starting to fall, both US based and I would say UK based. I don't get a lot of like the European news, and I don't really pay much attention. But I think those two places, obviously, you have big financial institutions, big financial hubs as well. Um, yeah, I'm starting to see a lot more of that. So this is probably their indicator. But this is exactly what like I've said, like you said as well from the beginning, like it all starts with the markets, like as that money comes off the riskiest assets and it just trickles down. So now where obviously property is seen as a much more, I would say, bankable asset um, over securities, etc. So it's now starting to come into there. And you got to wonder how many people have over leveraged themselves on this sort of cheap free money.
Oh yeah, yeah. A lot of people have over leveraged, and they borrowed money from the banks and they leveraged the money from that. So
They're
if they got
leveraging leverage.
liquidated, yeah, literally.
But
Yeah.
have basically, if you think about it though, like I don't know who said it on the last call, and it just stuck in my head that there is no such thing as equity. If the root
Mm,
of it is debt, then there's no such thing as equity. So you've got obviously how many institutions before that capital lends and ends up in the retailer's hands, how many leverages on top of that initial debt has there been for them
Yep,
to go and do
exactly.
it so you've got your bottom layer of that pyramid doing exactly the same that the top's been doing. So this is exactly it. This is the Ponzi coming apart. Um, and
Yeah, you said it, the way you defined it was good, that it's all debt at the end of the day, and it's just a big Ponzi scheme
all of it,
waiting to
and
collapse. Yeah.
I was actually very surprised because there's a lot of Ponzi's that exist within our in our financial or centralized finance system, like insurances as well. They're effectively Ponzi systems because
Uh,
you're all putting money into a pool and it's based off obviously risk assessment and
mhm,
like I seen it firsthand when I as a very healthy individual I would be paying the same premiums relative to my BMI. So someone who was grossly overweight, but and like significantly unhealthy, as long as they had the
mhm,
same BMI as me, they were paying the same premium.
yep.
But if you take like the pandemic, I actually thought that the pandemic would unwind that Ponzi scheme. Um, but they held on, and I think there'll probably be a government bailout somewhere along the line. Pension schemes, another Ponzi. Like Yeah, how it's very much like, I think over the last few years, especially when we're looking at crypto, and you've got the centralized finance world kind of pointing fingers at the decentralized finance and the crypto world, saying you're a Ponzi. But it's one of those situations where it takes one to know one.
Exactly. At least crypto has some fundamentals backing it. Like if you look at these currencies, there's literally no actual real fundamentals. It's a dance with the devil, trying
Oh,
to balance
exactly.
everything.
Exactly, and
You know?
like now, what we doing? You see him in the UK. I am almost certain that we're going to see a two currency world,
Mhm.
and we're going to have two reserve currencies. I think we're going to have the one that everyone's sort of downplaying in the Western media, which is that sort of Russia Chinese rare earth mineral backed currency, and then I think we're going to have the USD almost force every currency in the world to peg to them. Um,
Yep.
like
Yep.
it's there is a monetary policy war here. I don't know if the European Union and the UK have agreed to this, or if this is part of the plan. But in the spirit of trade and the economy, if the US is doing exactly the same as the UK and Europe are doing in regards to like quantitative tightening, then it's kind of a race to see who can do it the hardest. And if the US is doing this, then the UK has to ease. It actually has no choice but to ease, otherwise it will succumb to it. And I think there was an
Yep.
article earlier in the week with Lebanon. So
Mhm.
Lebanon did have a dollar peg, so the Lebanese pound was dollar pegged, but it was pegged at a value that was decades old. So they've just repegged, and I think we're going to have to see a repeg happen as well, sooner or later, because this is just going to get drastically out of hand. And I've warned several of the companies and governments that I've been advising for the last sort of 2.5 years that this would be the circumstance for their own currencies. um, Now it's kind of coming into fruition, and this is it's there's just a war on way too many fronts, and it's weird how they're able to collaborate on certain things but not on others. So you might have seen with the Europe now sort of alleviating sanctions on Russia so that they can get fertilizer in because they're having a food crisis issue.
Yep.
So
Yep.
like, but while at the same time they're screwing them every other way. So how does that work?
Yeah. I mean, it doesn't make any sense. Like, even if you think about, I was just reading an article just before you called, about how US dollars strength is messing up with the emerging markets as well, because for them their debt is in US dollar, right? So
Yep.
it becomes way more expensive for them to pay off those debts, and in effect, it's also it's negatively correlated with US as well, and even the imports become too expensive for them, right? So sorry, exports from US. So apparently, from what these experts are saying, that how Bank of England kind of made this temporary QE.
Hmm.
They've been thinking that maybe even the Federal Reserve might look into doing a QE, because even the treasury. Yeah, exactly.
So we're gonna increase rate. But I've said this, I don't think they have been shrinking their balance sheet. How many times have I
Mm,
posted now in the group that shows the Federal Reserve's balance sheet, and it's not changing.
yeah.
Like it is not changing at all. So okay, we're entering quantitative tightening. We're increasing rates, but our balance sheet isn't tightening.
Mm.
So that says to me that they haven't stopped.
Yeah, I think this is just the beginning. 2023 is going to be one of the worst years. I don't think people are ready. I don't think they realize how bad 2023 is going to be.
Yeah, well,
Like,
this is I saw another thing factor as well about the S&P.
yeah.
Like if it breaks down here, it'll be like the first time in something like 50 years
Mm, yeah.
that this has ever happened. So like, oh sorry, if it breaks down more than 50%. So we're kind
Mm,
of sitting at the 50% level. Crypto's kind of been sitting about that level as well.
mhm.
Obviously 85% has kind of been the average for a crypto sort of winter, but the if the S&P drops, like it's going to pull everything down. And I don't know if regulation would come in soon enough. There's a lot of people are expecting like a bullish Q4 based on sort of historic markets. And that could see us sort of go and fill up that 37K, 35K sort of price gap that was formed. But look, I think everything inevitably is going to come down, down, down. We need to hit those levels that we've been saying for a while.
Yeah, there's too much pressure. The US dollar pressure is very, very, very high. A lot of even, I mean, just by looking at the trade volume that we've been seeing the past few months, there's so much trade volume in the market. Like, I haven't seen this kind of volatility in the past few years. It's insane. I have to adapt to these new market conditions. Like even the way I take my entries in the time frames, I need to go down to the lower time frames to take these entries. Like
Yeah,
before, I would take an entry on M15 time frame. Now I have to look at the M5 or the M1 time frame. That's how much volatility is in the market at the moment.
well, it's
Yeah.
obviously it's a trader's market, and that just goes to prove why you're 8 winning streaks in a row. All right, 2 months straight. Let's pull up. BTC still consolidating, isn't it?
Yeah.
Let's just see where this
Oh
is
yeah,
going.
one more thing I wanted to note here is like even the US Treasury yields for the 30 years, even that's out of balance, which is kind of weird because US literally backs those treasury securities with the full faith, right?
Yeah.
So it's supposed to be extremely secure. Even those are kind of getting out of balance. I was just reading it about here. One second, let me show you. Where is it? Yeah, here. See, they have to. The Fed may have to stabilize the price of treasuries here.
So
Yeah.
they're going to intervene again.
Yeah, they might have to intervene because they're declining in price and they're resulting in way higher yields at the moment. And that's not supposed to happen when it's supposed to be so stable. Yeah. So that's an issue there as well. Interesting times.
Very. What's it called? Have you seen what Michael Burry's been coming out with? I think he's a great person to follow in times like these. Like the guy's, without a doubt, he's proved himself. And he's probably one of the biggest macro investors of our lifetime.
Really? What's his bet on? He bets on chaos, right?
Yeah,
So so so
pretty much.
literally, like I mean, yeah, you gotta
This
follow him too.
this is literally the best guy to follow right now. Like everyone else's mentality just seems very short-sighted, still very attached to what the media, what the Fed is saying, and the Fed is months behind. Its claims of what the market and the economic situation are, they're delayed. So you can't listen to this guy. Fuck Powell, fuck Biden.
I'm sure
Cassandra.
they know. I feel like they know, but they just don't want us to know, you know?
Oh no, it is. There's so obviously this is the problem is when you've got the US is such a major political global power and such a major financial market, the two become interlinked. So none of these guys want to be the reason why the market collapses at all, do they? Not within their terms, where you got midterms coming up as well. Like they don't want that responsibility. Oh, sorry, something just fell off the wall. But they don't want that responsibility. And like you saw it during like Trump's when he was going for re-election, and he was kind of using the market sort of that huge market rally that we saw when we had obviously the big fingering in March 2020. Like he was kind of taking credit for that. Like so
Interesting. Yeah.
but and this just comes down to them really just taking advantage of people's lack of knowledge and lack of intellect, because they're not the reason. The reason is something is 2008. It's 10 years, more than 10 years before their time, that was the reason. So I think it's like people really need to detach the financial markets from politics. The politicians, whilst they do have an impact on the markets, there needs to be an education, I think. And obviously that's what we're here trying to provide. But it's
Exactly. Like I mean, if money has no value, like it should piss off people that they don't have. Like when people complain that they're broke, I mean, like when money doesn't have value and you're complaining about being broke is like it's such a contradiction. You should be pissed, you should be pissed.
Yeah,
And I get it, they put systems around you so they stay rich, but it's all about knowing. It's all about information. The more you know.
exactly. I actually had this conversation with someone a few weeks ago about like education systems, and it doesn't really apply here in Dubai, but if you look at, let's say, the US and the UK education system, you can go to like a government school, which is obviously free for everyone, covered by taxes, and then you've got private education. And if you think about what are you paying for when you pay for private education in sort of the US and the UK, it's obviously the network is sort of number one. Like look at all of the Eton boys and all of the politicians that all go to school together. That's number one. But I would say number two, that's the cost not to be indoctrinated. Because I know people that have been privately educated in the UK. I know people that have been to public schools, and there is, I would say, there's more push on education within the private system and less on indoctrination as opposed to on the public school system. So it's definitely there. Like a public school system is literally designed to churn out workers for your economy.
Yeah, completely. Yeah, I agree. At the end of the day, if everyone are entrepreneurs, who's working for us?
Yeah, no, well, this is the thing. Like, I'm actually gonna write. I'm in the middle of writing an article. I'll share it with everyone. But I see like a huge evolution in the gig economy to the point where everyone is effectively their own entity, as they should be. Self-sovereignty is everything. But you charge for your services. So how much of your time, if you were working a 9 to 5, how much are you actually doing in that time? Could that time actually be spent using the same skill that you're doing for one client, but for multiple? So you basically develop this gig economy across every industry. But gig economy's very much just been limited to like creatives, like designers, website designers, graphics designers, all of those. Hasn't really taken off. Obviously, you got Fiverr, but if you were to take any other industry like human resources, that's going to decentralize. Accountancy, like you could I hire just one person as accountant. I use a HR software. I don't need a HR person, but you're getting these HR entities now that's all they do. They're a function that would basically outsource. So I think the inevitability of every company is there's going to be a two-stage of decentralization. One where you have all of these companies that take that expertise outside of the business operation. So the main company becomes leaner and they'll outsource everything. So human resource, all of the bullshit that is, I would say, hinders the operation of the main vehicle. So all of that will come out. And even then there'll be a stage two where those companies would end up having like a decentralized network of individual skills. One person, freelancer, or you call them self-employed, has their own skill and they could be servicing up to 5, 6, 7 clients.
That's interesting.
That's the future, man. That's the way I see it anyway. And I'm working on a model now to use it within my industry. So, or in one of my industries. So I think if I can prove it there, I think it is the way things are going, and I'm slowly starting to see that now. The patterns are there. And we just go through, like I've always said, like if you want a unicorn startup today, they're just portals. They're just like middlemen portals at the moment that sit in the middle. But all they're doing is they're either decentralizing the centralized or they're centralizing the decentralized. Where you had all of these restaurants that would do all their own deliveries, Deliveroo came along and centralized it. And then another company came along and they decentralized the delivery side of things. So then just this portal, this application sat in the middle. Like that is the steps to building a unicorn. Just it's very, very simple. And like anyone could come up with that business.
Completely. I'd be interested to read your article.
Yeah,
sounds like an interesting.
I was thinking of starting a Substack just for everything I've just been writing, but yeah, definitely, I'll share it with you.
Let's go. Yep. So what was it? September is done. Crazy third quarter is done. We had massive moves during September, like I mentioned before, because it's the last month of the quarter. So here on this coming week, the first week of the fourth quarter, let's look at the fundamentals. So this week on Monday, I'll be looking at JPY, Bank of Japan's opinions. It's a yellow folder, lower impact, but still I'll keep an eye out on this here. We do have bank holidays. I'm not sure what's happening in China, but this whole week, Chinese bank holiday is going on. So I'm sure this might be affecting crypto in some way. I think there's a lot of Chinese trade volume when it comes to crypto, right?
This actually it affects a lot of the trade.
Yep.
Like we face it like a lot. And there's another it's like Chinese New Year where they'll close for like 2 weeks. And you'll find that there's pretty much zero trade coming out of China during that period. Like when these guys take their weekend or they have a holiday, that's it. There's no work being done.
Yeah, it's like it's pretty much the whole week this week. They're off. Yep. So we have Chinese bank holiday and we have Germany bank holiday. If you're trading the euro, need to keep an eye out on that. US dollar, one thing I'll keep an eye out on British pound is the purchasing manager index. I'll keep an eye out on that. But the main red folder here is the ISM manufacturing, the purchasing manager index, right? So this is something I'll keep an eye out on. This will gauge on the purchasing managers what they're reporting, right? So this is gauged to come in forecasted a little bit lower than last month. So this shows that maybe the economy is slowing down and the Federal Reserve's rate hikes are working. So maybe keep an eye out on this here. On Tuesday, this is a big one, job openings. This can show us how strong the labor market is and I think this is measured by let me see. Oh yeah, job openings and labor turnover survey. So these people, this institution here, they're the one who measured this job openings here, and they're reporting it to come in higher, so more job openings. And what does this indicate to the Federal Reserve? That they can still hike rates aggressively because the economy, according to this statistic, is still improving. So this is something to keep an eye out on. Factory orders, we can keep an eye out on that. It's supposed to come in higher, way higher actually from the last month, showing that the economy is still picking up, which still supports the Federal Reserve's rate hikes. Yeah. And let's look into Wednesday this week. Wednesday, what do we have? British pound, finance services PMI. Keep an eye out on that. We have the OPEC meeting. If you're interested in trading oil, something you can keep an eye out on just for general knowledge. I do keep an eye out on OPEC news as well. This one is an important one as well. Non-farm employment change. This is measured by ADP. What is the full form? Or yeah, automatic data processing. They are estimating to this for 200K, the statistic, which is way higher than last month. Yeah. So this is basically the estimated change in number of employed people during the previous month.
Why
so
are they
are
expecting
saying,
such a big change? Is there anything that's
I think there's still a lot of money flowing in the economy. I think the rate hikes are working, but they still need to be aggressively hiking rates, because if you look at the amount of rate hikes they have done from March, which was 0% to all the way till till last month, which was I think 3.5, 3.7%. This was the highest rate hikes that has ever occurred since the 1980s. So that shows you there's a lot of money had been printed in the economy during the pandemic. So there's still a lot of money in the market. This is why I think we're still seeing stronger economy numbers coming in. Same thing with PMI here, ISM services. Keep an eye out on that. Thursday, what do we have? We have Bank of Japan, government Kuroda speaking. I want to see if he does talk about the intervention that was done with JPY. I think it was very short-lived, because I'll show you according to my GJ charts. But I think the intervention was very it was fake. Like if you think about it, it's fake. They were buying JPY while selling their US dollar holdings, right? So it was just to prop up the JPY currency. So let's see what he says, how big the intervention was and what was the effect of it. And then we have unemployment claims, which is forecasted to come in somewhat higher than the last month. So contradiction over here. If you look at the employment change, a lot of people are getting employed, but unemployment claims is also coming higher. Yeah, but the main news is on Friday, because this is NFP week. So the first Friday of every month we have NFP, and on Friday we have NFP employment change, and it's showing that it's going to come in way lower than last month. This is showing that the economy is slowing down. So we have contradicting numbers here. So we have this showing that it's coming in lower, and we have ADP showing that it's going to come in higher. So, but the weight of NFP is going to be on this number right here. So I think if this comes in higher than expected, we might see more US dollar strength, because more people are getting employed. That means the Federal Reserve can still hike rates further. But if this comes in lower, we might see US dollar weakness for a while, maybe. But if it comes in around the same number, I think it's going to not have that much reaction in the market, because it's going to be priced in already. Unemployment rate, if you notice, it's the same, stagnant. So yeah, these are the ones I'll be keeping an eye out on Monday this week. So not as heavy as fundamentals from last 2-3 weeks, but something to still keep an eye out on. I think we'll have heavier fundamentals on week 2 and week 3 of October. Yeah. So that's with the fundamentals. Let's look at the technicals now. Technicals, yeah. So I did mention that with BTC, if you see how I marked out the chart here from the previous week, it's just been consolidating. We have seen the range inside not break at all. So you would not have made any money or lost any money with BTC.
There's
Let me
little
delete
to no
everything.
volume as well.
Literally nothing. It's just sideways. All right. So we had the month of September's candle close, right? So let's look at that. Let me delete the July one. I think it's insignificant here. Let me put that there. All right, so that's the September high, and let me delete the July low. So let me move the weekly. This is the problem with once the monthly candles close, you gotta mark out everything again. All right, so let me just move this. September. Okay, there. September low. Let me just 1 second. Let me look at. Let me see if I can move this weekly one, because it's bothering me. All right, so the weekly candle, if you see the current weekly candle, it hasn't closed yet. So at the moment, I'll just keep it from the previous week here. Or you know what, I'll actually move it, because we are not seeing much volume in the market. I doubt we'll see this low here break. All right, there it is. Okay, let's now begin from the monthly. So for September, just by looking at the September candle, that still looks extremely bearish to me. You see how we have exhaustion all the way towards the top, and we see how the price still closed below the previous monthly structure point, which was this right here. See, close below. So this is bearish to me on the monthly. On the weekly, clearly nice bearish structure. Lower highs, lower lows, lower lows. And this current week, if you look at the if this candle closes somewhat like this week, this shows us a lot of exhaustion towards the top, right? So a lot of buyers exhaustion. So sellers are still in control in the market, which is still clear bearish indication to me. So this time frame is correlating with the monthly time frame as well. The daily time frame is clear. You see how we have been consolidating for a lot, the last pretty much 2 weeks, pretty much. You see how it's been inside that range. It's failed to break that range inside. We for a minute here we have a small counter trend line, I would say. This area at the moment, what do you see? The counter trend line has broken through, giving me more bearish indication on this. And I think this might have been a small retracement, this small counter trend. So for this week, the areas of interest for me would be around, let's see, let me actually draw out the structure because it's so choppy in this area here. Yeah, so what do we see? Last structure point here that would break would be around this 19K area. And I think this 19K area would be the medium probability short position, because fundamentally I'm very bearish on crypto, yeah. So, and with looking at the higher time frames, it all looks bearish. So if this area here breaks, we get our multi-time frame correlation. All right, so 19K is area 1 that I'm interested in, and then the area 2 would be if this area here breaks at the weekly low as well. So this gives me a lot of more confluences to take a short position. Therefore, this area here would be my area, higher probability short position, which would be around this 18,450, let's call it. There we go, 18,450. Not only I like that part, it's going to break the structure point here, right? So if this structure point here breaks, we're going to see more volume come into the market. And especially if the September low breaks, I think we can maybe scale into a position. So this is an important area I would be looking at with BTC. So I'm bearish completely. Let's see if we have, if there is a retracement here. If a retracement does occur, I think it's going to go towards this area here. You see how I've drawn out this line as well here a while back. If we do see structure point at this area here break right there, you might take lower probability though. This will be a lower probability long position at 19,000, let's say 19,600. Let me look at the weekly chart once. Yeah, so let's say 19,650 area. I think this could be a lower probability short position, a long position. And if you had taken this position and it works out well, I would maybe TP around area 1 here or area 2 towards this price gap here. Obviously, if some miracle happens this week and we see this area here break, then I think we're going to flip our bias. It might become bullish, but we got to wait and see, because this area here is 22,500. So if this area here breaks, I think we might be bullish. So let's wait and see what happens. But at the moment, I'm clearly bearish with all time frames. Is this clear? Or any questions regarding BTC? Yeah. All right, let's look at Ethereum then. Ethereum also clearly from the previous analysis, we see what is it doing? Consolidating. So let me delete the previous analysis. Let me go into the monthly chart. So the monthly, like the structure wise, monthly is clearly bearish, but from the previous month though, the previous month looks indecisive. I think this might also be due to the Ethereum merge that happened last month. So we see indecision of this candle here on the monthly. Let me mark out the low, just the low. Let me mark out the low maybe. All right, so the monthly is indecisive, but overall we are bearish on the monthly. On the weekly, I mean, look at the weekly candle. That's like that's such a weak doji candle right there. This might maybe show that maybe the bearish volume is dying off, and we might be seeing as like a retracement. You got to see this. It's like it's in a way, think of this as a roller coaster. Like it comes down, loses volume and goes up, and then at some point it free falls back down, right? So but this weekly candle, still you have to be a little bit careful, because I think long positions would be around this 14,010 area, 1410. Let me mark out the weekly high and low for this candle here. So this would be week high, and then we got our week low here. All right, so this is giving me a little bit of indication that price might retrace, but if you just look at the wick of this candle here, we still have exhaustion, right? Buyer's exhaustion, and it's trading at a major support, major supply demand area, right? At 1300. All right, so let me look down into the daily time frame. That's look at that volume, just choppy area. Usually during consolidation, we see it's when price wants to accumulate liquidity, right? So during consolidation, it takes off buyers, it takes off sellers, it takes in a lot of liquidity. Once it's filled its tank, the fuel, then it's going to fly either up or either down. Yeah. And if you just look at structure as well, like overall structure is bearish, but what do we see? It's come into this this consolidation area as well. So I think there's a possibility we might see price maybe now it needs to break below or needs to break above, right? So on the higher time frames, on the monthly, we were bearish, but little bit of indecision was there. Weekly as well, we are bearish, but a little bit of indecision is there. That shows that maybe price might be pulling back. On the daily as well over here, but just by looking at the consolidation that's been occurring, there's a possibility it can retrace, but overall, I still remain bearish with crypto as a whole. So for me, at least fundamentally as well, I think I would be looking to take short positions. Yeah. So I think short positions for me would be at the lows here. Let's see. There is a supply demand area here that I haven't marked out. Let's see. Comes around 12. Yep, around 1250, 1249. Let's just call it 1250. Yeah. So I think for me, I think I can take short positions only around this area here at 12. Once 1250 breaks, and I want to see the structure point here break at 1245. So 1245 would be an area of interest for me to short Ethereum. Yeah. And I think that might be the only point I would be interested in taking a short position on Ethereum this week, because it has to retrace, way high. And I think that it's going to break up all of the structure levels here. So I think long position would occur only if this area here breaks, like I mentioned before, at 12, 14, 15. So if 14, 15 here breaks, I think lower probability long positions can occur. Yeah. There you go, 14, 15. So these are just the two areas I'll be looking at with Ethereum. I don't think it makes sense to look at any other point. Yeah, we might have a retracement all the way from here towards this area here, or even this area here. But this is just so far off that it would be a little bit risky to take positions here, because this could also be a break and retest, or even this area here could be a break and retest. Yeah. So I've mentioned this in the call. Maybe you can keep an eye out on these two areas here, at 1580 and 1700, if price retraces that far. Yeah. So I think those would be the areas maybe you can TP at if you're taking a long position at 1415. Yeah. So Ethereum is clear. Any questions regarding Ethereum? All good. All right. Let's look at EBTC. Yep. ETH BTC, same story, yeah, because Ethereum and BTC are already consolidating, so even this pair obviously would be in consolidation, yeah. So we are seeing consolidation, so no, it's just a ranging condition here. Let's look at the monthly first. So the monthly is interesting. We kind of made a double top there, Yeah, clear double tops. And structure, if you look at structure as a whole, it did try to break above this key area there. But if you look at the current monthly, it broke through. It did not hold as support. It should have held as support for me to be bullish, right? So, so for me, this is giving me a lot of bearish confluences. So, and even if you look at the September month, the monthly candle, we see a bearish engulfing. So a few confluences that show me maybe we are bearish with this pair. Yeah. So let's wait and see. It's not extremely clear because structure points have still need to be formed. I need to see something like price come here and maybe go up for me to be bullish. So gotta wait and see with that. On weekly, let's see. On weekly, let me mark out the September low actually. Only the low. Where is it? Where is it? All right, so September low, we're closer to the September low actually. Let's look at the weekly. Look at the previous week candle, the doji candle there. Indecision happened last week after that massive bearish engulfing from the week before. And if you just look at the current week, still there's not much volume here. Yeah. Still, structure remains bearish, right? Why? It remains bearish because it broke the last structure level there, and it kind of retested that structure level there. Yeah. So this is a bearish indication to me on the weekly chart. So I don't think it even makes sense for me to mark out the weekly here. Let's look at the daily. Daily clearly consolidated, kind of now starting to break below. Yeah. So I think with the just by looking at the daily time frame, I think this I might take short positions only if perhaps this area here breaks. Yeah, you see how there's a supply demand area there. Let's see the coordinates if they make sense. Yeah, 0.675. So this is an area of interest, and it's very close towards my area of interest as well. But this would be a little bit medium probability short position. The higher probability will be if the September low breaks as well. That gives us a lot of confluence and extra confluence, a very strong confluence, in fact, yeah, to take this trade. So around 0.66, no, 0. Let's see. This comes around this, yeah, 0. Let's just call this odd number here, 0.06665, satanic number, yeah. Let's put it 66. Let's see if that comes out right. Yeah, there you go. Now you remember the coordinates more clear.
No, man.
There you go.
Don't know if we should be doing that. Yeah, I think this is either asking for some bad shit to go down.
Yeah, that's an extra confluence. Then we got that, and if we do see price reverse here and it breaks this consolidation area, you see how price has been rejecting that area again and again. Let me see if we have a supply demand area here. Let's see, we do have a nice strong
I'm kind of
supply
looking at
demand
this
area.
this right angle triangle there.
Here,
Yeah, like from the
see
upper
it?
frame. Let me see if I can annotate. How do I annotate? Sorry, I'm just becoming a master. Okay, so I'll do like this one. You see that?
Okay. The trend line. Yep.
Yeah.
Yeah, actually, yep.
And
Makes
this right
sense.
angle triangle here.
Yeah, exactly. Yeah. This is clear. It shows us a lot of bearish momentum. So this confluence makes sense, right? The 0.0675.
Yeah,
It's
it makes
because if
sense.
this so if this breaks, we do see an extra confluence that it can head down. Yeah.
I think it's almost certain to break.
Yeah. A lot of bearish volume, like just by looking towards the left. Yeah. So yeah, this makes a lot of sense to take this position here. And obviously if the satanic number here breaks, take the next position. And then this would be a lower probability long position at 0.07. Yeah, so this would break this trend line that Aaron has annotated here, right? So if this area here breaks, we have confluence to also take a long position, but this would be a lower probability long position because price can do something like retrace towards this area there, or even all the way here, and then reverse, right? So there's something you need to keep an eye out on is these structure points that I keep mentioning. See we have the weekly structure point here. Price kind of came all the way, but it still needs to, I feel, come all the way to this area here, 0.0726. Eventually, I'm not sure if it'll happen this week, but if it does, something to keep an eye out is in this area here. So if that area holds as resistance, then that could be a nice break and retest short position. But for now, let me just draw this out because that's so far away, and we are so bearish with this. We are quite bearish with this pair. So these are the only 3 points I'll be looking at for this week. Yeah, and I'm pretty sure this this here should work out very well because how we are going to break out of this tight range here. Yeah. So ETH BTC is good. Now let's look at Forex and commodities. Let's look at GU. GU went to the lowest lows ever in decades low, right? Multiple decades low. I haven't mentioned it here. You see how our play, we taking a short position in the previous week played out so well, and even taking this break, and actually 2 positions worked out really well. So you could have made 2 trades from the last week, the break and retest and the lows break. So let me delete this. Let me switch off the moving averages so we can see structure clearly. Let's go down to the monthly time frame. I mean, like, there's no data here actually. If you just look towards the left, there's no data there. Yeah, I think there might be data. And you see something very interesting here. This caught me now. You see there's a red line here. That is the yearly trend line. Yearly. Like, let me show you the yearly time frame, 12 month. You see the lines that I've drawn out,
Yep.
trend lines. You see how that's rejected that yearly trend line damn near perfectly,
Yeah.
and just retraced really hard. Yeah. So, but this week shows us exhaustion with the seller's exhaustion, but we are extremely bearish. I think this week is just because Bank of England intervened last week by doing a temporary QE program. So this could be just that. Yeah, fundamental driven. Let me actually mark out the lows here. There we go, September low. And then let's look at September high. September high is actually perfectly, I think, correlated with week high. Not sure. Let me move this. There. And then we put on September high. September high. All right, so just by looking at the monthly time frame, we see clear bearish momentum, like there's no mistaking it, right? On the weekly, let's look at the weekly high. Let me move the weekly high there. That's the weekly high. And then the weekly, let me delete this. Weekly low, where's the weekly low? So the weekly low is perfectly correlated in the same point pretty much as the September low. Yeah. So if it does break that point eventually, that would be a really good shorting area. I'm not sure if it'll happen this week, possible, but let's see. Yeah. So with the weekly, we see clearly it came rejected that yearly trend line, and it's retracing. But if you look at the structure point clearly, we are bearish, and I think it needs to come retest the previous broken structure point on the weekly. Here you see the structure point here, this area there. So it broke through and never came to retest that area. Yeah. So that's something I keep an eye out on. Let's look at the daily time frame. Daily time frame, nice clear bearish clean structure. A lot of volume in this area. We see a lot of volume, right? And price since it broke through the last structure point here on the daily, right there at 1.14, around that area there, right there. It still needs to come retest that area. I think price might be doing something like this week, possible. It would maybe come around this area there at 1.14 there, and maybe we can get a break and retest setup there. Let's see. Let me mark that out. But something to keep an eye out also, you see how I've marked out this area there, 1.12500. This is, in a way, it's kind of like a structure point. If you see how it's found support there, and you see how price came retested that area there. I think it was Simon in the group. I mentioned how price can retrace to this area there, and we might see a nice reaction there, right? And even according to our weekly technicals, that's what happened. It came retested that area there. So price can retrace to that 1.14 area, but if price reverses from there, from just goes all the way down, like if you look at, I think in the lower time frames, it shows you what it rejected that area there, right? And it made a bearish engulfing on the H4 time frame. So if price does do that and retraces, I think eventually we can see this low area here break. Yeah. So if price doesn't retrace, goes all the way there, I think then short position there. But remember, we don't have data, right? We don't have data, historical data here. So the only thing I would be focusing on if I took this position would be quarter points, right? And you have to be extremely careful and monitor every quarter point. So area 2, let me mark that out, is at 1 point, let's call it 1.305 there. Yeah, that's crazy, right? So if price, I think, breaks here, we might then see British pound and US dollar be equal, right? One equal to 1 eventually. Yeah. And I think a lot of traders are betting that eventually this year we might be seeing that. So that's one. Yeah. Long position, I think I'm not going to even mark out long position. This just doesn't make any sense. I think there is literally very low probabilities that would happen. If there is a long position, you can take it out on maybe at 1.145. Yeah, if that structure area there breaks. And if it does break, maybe we might see area come through this price gap there and then maybe retrace. But I'm not going to mark it out just because the probabilities are not in our favor. Yeah. So that's with the GU. Any questions regarding GU? Clear? Yeah. GJ, let's go to GJ. GJ has been the most interesting pair, I think, in the previous month. Just look at the GJ candle. Like, look at the candle. That's ridiculous. Like, you see how it's literally, it was a tsunami both ways.
What is this?
What, like, this is some ridiculous. I mean, look at the candle. This is
20
2,000
pips?
pips. It's almost 2,000 pips. 2,000 pips on GJ on a monthly candle is ridiculous. I mean, if you look at one of the biggest candles here, I don't think that equates to $2,000. Like, if you look at this, sorry, 2,000 pips. This is 1,000 pips, right? And this might be the only one which is almost equal to it. I think this was Brexit. And this was an insane fall. Yeah, this was 2,600 pips or 700 pips. So you can imagine how insane this candle at the moment is. Like, the fundamentals were not as heavy as the Brexit, but still it made a 2,000 pip drop. This is because of the Japanese intervention and the Bank of England intervention. Actually, this is a very interesting thing to look at. You see the red line there? Again, it's rejected the yearly trend line. It's rejected it, and again, actually, every month I've been seeing the same thing happen, right? It's been rejecting the yearly trend line quite nicely there, yeah? So on this time frame, like, just looking at this candle, I can't like come into, there's no conclusion I can make out, yeah? But obviously, by looking at the time frame, we see, what do we see? One thing is here, is we see that price broke through the structure point and closed below there, right? So a little bit of bearish confluence. So something to keep an eye out on there. on the monthly time frame. Look at the weekly candles as well. It's just heavy weekly candles, big moves, yeah. And just looking at the current weekly candle, which happened, the previous one, see how it came all the way down there to 149 and rejected. This is a lot of exhaustion, seller's exhaustion, right? So buyers took control. But one thing is interesting is that when the Japanese yen intervention happened the week before it, I think it's literally corrected that whole move 100%. Yeah, you see how that big move happened? It's corrected the whole move pretty much. I think this will be more apparent on the daily time frame. So this move happened on the Japanese intervention was around this area here, and it's pretty much 100%. It's retraced, and these moves here were insane. There's a lot of volatility here. And this is why on if you're trading on the MetaTrader or with your broker, there's a high spreads with GJ, yeah. And there was too much volatility. I didn't trade this pair from the past 2 weeks. I've been focused on gold most of the time. So from here, what I see with the weekly, and the weekly has retraced, but if you clearly see, it's bearish, right? Why is it bearish? It's because it broke the structure point there, and you see how it's closed that week structure point there. I also mentioned monthly structure point, because on the monthly, you see how that's a structure point there that I just mentioned on the monthly. So on the weekly and the monthly, I kind of have bearish indication. Weekly is a little bit more clear, but it's retraced a lot, very heavily retraced. Yeah, so I would be a little bit careful. On the daily, let's look at the daily time frame. On the daily time frame, I think there's nothing to do here. I think the best thing to do is to wait for its daily structure point here to break if you're going to take a long position, which would be also a break of the August high area at 164. Yeah, so 164. Yeah, 164. But if we do see bearish volume kick in from this area there, then it would be at this area there, a structure point breaking at 154. Let's call it 154 500, because that's the last structure point. Yeah, so these are two higher probability areas. But if you look at the range here, right, the range here, this is a big range here, right? If price does choose to retrace, this is a 700 pip range. Yeah, so if you want to capitalize on that range there, then you can maybe take a little bit medium or lower probability short position if the structure levels on the 4-hour break, right? So the 4-hour structure level here at 160, if 160 here breaks, if 160 here breaks, I would take a half position here and maybe take another position if this area at 159 500 breaks, because that's the August low and the daily low. Yeah, so let me mark that area out as well. That's let me put 160. Crazy how many pips it retraced actually. A lot of traders got wrecked with this this movement here. Yeah, so this is what I'll be looking with GJ: 160, 154 500, and 164. Yeah, but technically on the weekly and monthly, we have some bearish confluences. So I would be I would be leaning towards shorting GJ, right? But still, it's a little too indecisive for me. So I want to be very patient with this pair this week. Any questions regarding GJ? All clear? Yeah.
All clear.
All right. So, well, one thing to actually notice with GJ as well, that I've just caught one. You see how it's made kind of triple top there. So another bearish confluence there. All right. So that's what I'm looking with GJ.
So you're saying that triple
gold.
top and then that breakdown, and then we've just got that retest coming back. So
yeah, and we got the retest happen, and we see the structure level there perfectly.
Yeah, so we got top here,
Yep.
top here, top here,
one.
and then we've broken down, and then we've gone down to retested that confirmation. So it's a pretty good short position.
Yep. But just by looking at this area there, the exhaustion candle and how much it's retraced, I want to take maybe a little bit more precautions. This is why at least on the 4-hour structure break, would give me an extra confluence to take the short position. Yeah. So
Yeah.
that's what I'm looking out with this pair here. And then gold, my favorite pair. All right, so gold clearly this month has been extremely interesting. Clear bearish momentum all the way through, not only clear bearish momentum. What do we see? A big major area of support, supply and demand area actually. You see this area that has been holding for months, right? Which is at 1680, right? Around 1680 area. It broke through this month, yeah. And then on the weekly, let's see what happened on the weekly. Look at the monthly candle just one more time. Monthly candle is clearly bearish, but we do see wicks at both sides, right? Giving me a little bit indecisive. It's a little bit indecisive. So on the weekly chart, what do we see? Clear bearish momentum. Price broke through 17, this area here at 1715, which was the last structure point, and also broke through the major area that I mentioned, 1680, right? This area there. So price, I feel, has almost pretty much made that big retracement towards our major area at 1680 this week. Let's look at because the weekly candle as well is kind of indecisive, right? We have exhaustion towards the bottom and a little bit of exhaustion towards the top. I remember a lot of traders were taking long positions as well when it started retracing. But the daily time frame is the most interesting one. What do we see here? Nice clear bearish momentum. What has it done? Retraced all the way through, come towards the structure point there, which it broke through and retested it with a nice clear doji candle rejecting the top, right? That gives us a nice exhaustion. So there's buyer's exhaustion, right? So I think this week that we have clearly retested, we might be seeing retracement, right? Price come back into the bearish confluence perhaps. But one thing I don't like is that it did do this, but it also did this, right? The day before. So let's look down in the lower time frames for extra confirmation. 12-hour, yeah, this is the 12-hour time frame. 12-hour time frame is finding support at this area here at 1660. And I think I would like to see 1660 break perhaps. 4-hour structure. What do we see on the 4-hour? 4-hour has clearly broken through, right? Broken through, retested that structure point, daily structure point, and is retracing. Actually, this trade here, the retest of this structure point was actually mentioned on the weekly technicals, I think, from the previous week as well. Yeah, so you see how I mentioned 1664.5 break and retest. What do we see here? 1664.5 break and retest, right? This area, the daily structure point. So I would short this perhaps because one thing you need to notice is that if you wait for the daily structure point here to break, which would be obviously higher probability, that's still a 400 pip move, right? For it to come all the way through there. So if you do want to take a position here, I think you should wait here, let this area there break, let the daily low break, and then maybe take a position at 1659.4. Let me mark that out. 1659.4. So that would be, but still, this would be a medium probability position, not high probability. High probability is all the way here at 1620. 1620, yeah. So these are the 2 points maybe I'll be looking at this week. Or there's this, I would consider this as low probability. I'll give you another option actually. If this area here breaks, I think this would be a higher probability short position at 1645, because this is a weekly supply demand area as well, and we do see nice clear structure as well. Yeah. So you see how we made that nice structure there, and it took off from there. Yeah. So if price breaks through this area, and it comes through something like this, comes through here, finds resistance, then then I'll be taking a short position. Yeah. So that's these are 3 areas I would look at with gold when it comes to taking short positions, right? Long positions though, let's see long positions. So if 1680 breaks, right? So if 1680 breaks, this would give me a lot of interesting indication, because on the monthly time frame, I've mentioned that 1680 has been a very strong area of support, supply and demand, right? So if it does break, 1680 breaks, that doesn't only break that area, it breaks also the structure level here. This structure level, this structure here, right? This consolidation structure. So if this area here breaks, that means price has give us a lot of confluence to take a long position. So if that happens, I'll take a long position around 1680 here. $16.80, yep. 1680 would be an interesting area to take a long position from, but you have to be a little bit careful just because of the strength of this supply demand area there, yeah. And price can do something like maybe go there, go all the way to this area there, and maybe retrace, yeah. So, but it's a good range, by the way. If you look at the range here, we have around 300, more than 300 pips, 320 pips, right? So it's a lot of money could be made with that long position as well. So with gold, these are the only interesting areas I've been looking at, which with short position, low probability, medium probability, and high probability at the bottom. Yeah. Let me look at the 4-hour time frame just 1 second. Look at the 4-hour candle as well. That's a nice clean 4-hour candle. Nice rejection towards the top, and it's kind of closed under that structure point, and then gave us a bearish engulfing. Yeah, and it's also breaking under my moving average. So this is a clean. I think it's giving me a lot of indication to take short positions. Yeah. So that's what I'll be looking at with gold this week. Let's look at DXY real quick. Look at DXY, clear, heavy momentum, little bit of exhaustion towards the top. Let's look at reference points here. Nice momentum, right? During the 2001 bubble, which happened. So we're kind of seeing the same momentum here. Weekly, nice, clean, bullish candle. And last week we just saw some retracement happen. Maybe this week we might see a little bit more. If this supply demand area, this white area doesn't hold, we might see a retracement towards this area there, and maybe we can see price breakthrough, right? And once the price breaks through these last highs, which is the yellow line here, then we will see a lot of US dollar volume. Yeah, daily as well. Daily as well is showing indication that it might want to retrace further with that rejection there. So I'm going to be patient here. Maybe if DXY breaks the structure point there, I think then we're going to see a lot of volume come in with US dollar, right? DXY is something I keep eye out on when I'm taking trades with gold or even GJ or GU. It has a lot of correlation, yeah. So something to keep an eye out on DXY. So are we good? All clear? Any questions regarding any pair?
I think that's all good.
All good. Yep. So this might be our 9th week win streak, hopefully.
I hope so. I
Let's
hope
see.
crypto starts to make a move, but obviously there's no fundamentals this week that are really going to have too much of an impact as well. But I kind of need the break from trading, to be honest.
Yeah. I need to take a vacation as well. Eventually I will, maybe in December.
Yeah, but no, like things need to start moving now, I think. But I'm not even paying attention to like crypto fundamentals. I have actually bought some ICOs, and they've been performing quite well. But this is actually like where you actually see very good projects start to come out, and not just a load of retailers that are just pumping shit scam projects.
All right then, guys. Let's meet on Wednesday then. Yeah.
Peace. Yeah.
All right. Take care, everyone. Take care, Michael. Hello.